Sushil bhai, good morning. Thank you for joining us. Did you manage to reach on time today or again trapped in rain?
When I was here, I did an interview with Swadesh first.
Okay, so how did you manage on time today? There's red alert in
I
Bombay.
come in by 9:15, 9:30, but today I left before 9 because BKC is always a traffic jam after 9.
Okay, that's a trick. Start early. Don't be
Yeah, but
lazy.
then my office is little next to Maker Max City, so it's nearby that way. I don't have to enter into BKC fully.
Great
Off
to
the
hear that.
bridge and office is there.
Great to hear that. Okay, what do you make of Reliance Financial Services price discovery? 260 rupees. A good 70-80 rupee higher than what the consensus view was.
It's the retail frenzy which you can say. I don't think so institutions are buyers at this price.
Why would you say that? When you say this price, what is the relative comparison you are doing?
See, thing is that if people are building 3 times, 4 times book on the book value which is transferred to the arm, is not the real way to look at the business, no? Because the business will be built. The foundation is led well by transferring treasury shares and net worth and enabling technology. But ultimately, business plan, expansion, customer acquisition, average ticket size, what segment, all that will have to see. So now you put up Bajaj Finance, I understand, 5-star, Poonawalla, credit access. Ours is not it's a housing finance. The rest of the companies have mixed business. Reliance maybe Bajaj Finance has almost 35-40,000 crores of housing book is 80,000 crores. So you'll have to go segment wise. So digital lending is something what you'll have to look and then decide.
Reliance, by the way, now in the normal trading has opened at 25.89. So the Jio Financial derived value stands at 252.85. Kunal, a fresh high for the adjusted value or the combined value?
Yeah, I think fresh high for Reliance. I think even if you look at this 20-30 point opening, gap up opening, it's a fresh high for Reliance.
Okay. Sushil bhai, now what happens to the Reliance stock per se? Because there was a sum of part valuation which was given to the treasury share. That has been unlocked beautifully. It goes back to the core business now, which is refining Jio Retail. Now, is this an indication that they've unlocked the treasury share, which means the next 2-3 years they'll start unlocking other businesses also? Because that's always been the good old buzz, that when will they list Jio platform, what will happen to retail?
Thanks for having me on the show, Nikunj. My personal thinking is Reliance oil to petrochemical and gas business is on a phenomenal run, specifically the new discovery which is commercialized. So value that separately, which will remain the standalone always. Retail will have a separate listing, whether it happens in 1 year, 2 year, one time will say, and what is the India story at that time. Looking at the current scenario, it may happen earlier than what is being thought about because the success what Jio Financial has got and what the market price of Reliance is indicating. Second thing is telecom is also on upward swing. And once the 5G rollout is near completion, Reliance would look at monetizing because Reliance has indicated everything what is potentially going to happen there. The business plan and the retail and Jio both are known to the world. How India GDP, that is whether 3 trillion is 5 trillion or 6 trillion in next 3-5 years, how is per capita income moving? Because it's a India consumer play. So whether you look at telecom, retail or oil to gas, everything is consumed by consumer. That's the story. So if in India story on a consumer is going to be good as what is being made out on per capita basis consumption story, I think it's bound to do well. And elephant dances at a time. It can't run every day. So I think the story will emerge again on the demerger. We may not hear much about it in the current AGM or annual report, but sooner or later it's bound to happen, and it may happen earlier than what the street was estimating. I think the patience of last 3 years is being tested. Next 3 years would be interesting from Reliance perspective.
So when the stock will list of Jio Financial, I think in middle of August, assuming that it will list at 260, that's a discovery price. Would you advise our viewers that they should sell it when they get the shares in the demat, or they should simply keep it?
So the shareholders will have enough view between AGM and the current quarter result, what they indicate, what kind of plans they have, what is the testing pilot book, what they have built as on today in July, what businesses they will acquire in, whether they do wallet business, they integrate the payment bank, digital broking, asset management, all kind of fintech services, what all other competitors are doing, as Reliance ready with everything, then you'll have to decide sum of parts and ascribe a value to it. But as on today, it looks expensive because people are valuing the treasury shares at the market value fully at 100%, which you don't give in other companies. And the balance business is being almost put at 4 to 5 times net worth. So that overnight, you might have sound footing where the foundation of a building of the tallest tower of India is possible. But that tallest tower to construct, Mukesh Ambani, will also take little time. So you can't say that he should achieve overnight and then not have the quality which he always builds in. So he believes in quality, which will take time. So patience will prevail if you are a shareholder. So don't rush in, opportunity will be offered, but look at the roadmap which is provided between today and the actual listing day. So once you decide on all that, then you will be able to figure out what is a good value for all the businesses. Per se, Reliance as a combination, you have 4 companies to play now, indirectly or directly, and stay positive as an India consumer play.
2589. Is Nuresh there? Can we get Nuresh back up? Maybe in some time. But 2615. Kunal, so Reliance was this lazy, late mover. It came to the party late. But when Reliance comes to the party, it can really party hard because of the size and the presence it has on the Nifty. Now, this is 10% of the Nifty, which is Reliance. You got 14% of the Nifty, which is HDFC Bank and HDFC Limited. That's 24. You have 5% of the Nifty, which is ITC, which already is in some high octane drive. And then you got 7-8%, I think, is Infosys.
Yeah.
10 plus 14, 24 plus 5 plus 6 plus 30. 32% of the Nifty is looking good.
So TCS, add to that TCS and a few of the other names. So yeah, that makes
Hopefully Infy also.
hopefully Infy post results also. But I think for Reliance, the in fact this move of demerger actually propelled the stock, because I think start of the July series the stock was at 2550 odd levels, and yesterday closing we were almost at 2850 mark, which means a 8% jump or a 9% jump for Reliance Industries in the last 10-15 odd days for the stock price. I think that propelled the stock or led to the stock moving into a much higher trend than what we were probably anticipating and expecting a couple of months back for Reliance Industries. But I think this is a good price discovery for the stock. It's come back above that 2,600 level post the demerger price for Jio Financial Services. So again, good positive for the stock.
Sushil bhai, I'll give you a very different thought and something which may just sink in with what you've been talking from last couple of quarters. Let's keep this special situation aside which created excitement and pent-up demand in Reliance. This event is over. But if I go back to the core business, unfortunately, sir, is not in a fine fettle. Jio is just about there. Retail is growing, but nothing so great about it. And the old refinery business, which is the cash flow business for Reliance, is just about at par. Which means that now that the event trigger is out, do you think the upside in Reliance will get capped? And this was like a 1%, this was a one-time 5 to 7% move, which markets have got already. And Reliance will go back to its hibernation days.
So Nikunj, to answer your question, first there was a combination of retail buying in Reliance shares which happened for exercising allotment of Jio Financial as a right. A short squeeze on the futures market would have happened because every buyer had to take delivery and the seller had to deliver. So in last 2-3 days, the position had to close. So between the futures market, there would be a short squeeze and the discovery would have led to that 28.58 and closure of 28.41. Now you will have to break up each segment-wise business. Everybody is fearing that GRM and Reliance would be lower than the last quarter. But look at the diesel throughput which these people have managed with Russian crude supply and to Europe. Can there be a surprise? The gas discovery potential, if they announce that total discovery and what potential they have tied up with based on the current consumption, how it's being sold, what value will be ascribed post the result. Jio ARPU may be lower than the competition, but their growth on numbers where subscriber is concerned and the kind of bundling they are doing with other packages, they had a good success in IPL. how much competition they take from others and how they grow. That is another thing to watch out. Retail, I'm quite sure now with financial support which comes to consumer, they will have a little higher penetration where they stand. So if there is a value around 25, 2600 and you have a 1 year outlook or a 6 month outlook, I think Reliance will do well. But if you think that short squeeze, which led for a 100, 200 rupee move between the retail frenzy as well as who wanted to buy Jio Financial, maybe over for a time being. But I think we need to have a fresh look after tomorrow's result and Monday when we come, how the outlook is given and the annual report is not out. So we need to watch how Reliance is going to talk about the new energy business where they want to start with polysilicon to solar module and then hydrogen. India is not a single company with solar polysilicon manufacturing. China dominates 95-97% of technology and production where polysilicon is concerned. The integration which Reliance will be able to do on solar to hydrogen, maybe only one other giant rival conglomerate can do it because they are also talking of polysilicon. Today's ET newspaper headline is talking about First Solar and the US delegation has spoken about it that India is able to export higher to US. So if Reliance is able to do captive consumption and have a local production, they have 10-15% higher markup on modules. Sending one container of polysilicon equals to 10 to 12 containers, 40-foot containers of module. So thing is that advantages may be in Reliance's hand, but only time will say. I am quite optimistic because it's an India consumer play. If you are expecting to compete with small caps and mid caps to perform, it can't happen. But within large caps, Reliance will remain a story which you'll have to take a view from 12 to 24 months.
Yep, and this is a long-term story. Sushil Choksey, always good to have you on the show. Thank you for taking the time out.
Thank you, Ash. Thank you.